NAT, Nordic American Tankers, Q1 2025 earnings report. This is amazing. This actually dropped, I think, late May, but this is at the end of the month of June where I actually had a chance to get to talk about it. Obviously, within the last month and a half, there's been a lot going on geopolitically. You had the Israel-Iran conflict. You always had the tariffs. You had the threat of the Strait of Hormuz being shut down. And so that all affects oil tankers, and transfer of oil, which is the most used energy on the planet. And so what I really wanted to bring up first before we get into everything is if you go to Nordic American Tankers website and you go over to the press news release, these are all the different press news releases on the first page. And I had to zoom out to get it all on here and screenshot it, because when you really think about it, it's nothing short of amazing of what management has been doing, and with them showing confidence in their company. Again, this is a family-run company, a family-run oil tanker business, and Herb and his son are putting their money where their mouth is. And so this is going back all the way to April 7th on the first page, right? Nordic American Tankers, the Hansson family buys more shares. April 8th, non-executive vice chairman of NAT, Herbjørn Hansson, the son, buys more shares. The company is in active phase development. Nordic American Tankers reports March 31st, 2025, path upward. Nordic American Tankers non-executive vice chairman NAT Herbjørn Hansson buys more shares, which is May 30th. June 2nd, Nordic American Tankers founder, chairman, CEO buys more shares of NAT. June 4th, Nordic American Tankers, the Hansson family continues to buy more NAT shares. June 11th, Nordic American Tankers, the 2024 annual report. Then you have June 25th, Nordic American Tankers, vice chairman Herbjørn Hansson increases holding above 5 million shares. And on June 26th, Nordic American Tankers founder, chairman, CEO buys more NAT shares, bringing the family holding to 10 million shares. So that's all on the first page on the press releases for this company. Over 6% of the headlines I read off was them buying shares. Okay, and so now the common shares outstanding is about 211 million. The family owns 4.72% of NAT stock, because you do the 10 million divided by the 211 million, of course. On the earnings report, they have the total assets of $867 million. They have a shareholder equity of 500 million, so $500 million. And their current book value is $2.36, almost $2.37. That's pure book value, assets minus liabilities. So they're in a good position. They have 21 vessels currently. They've been buying and selling off some ships. So over the year span, they've actually added one extra vessel. And when you look at the TC time charter rates for the Suezmax, which they only have Suezmaxes, the time charter rate is $36,500. And so that equates, when you add in the 21 vessels they have now, some of the vessels, they actually already have a contract in place with some big players around this range. But for easy mathematical purposes, we'll just times it out by 21 to make it easy. That's about $766,000 a day. That's almost $23 million a month. And if you expand that over a year, that's $275 million a year, almost $276 million a year off time charter rates. And if you look at this line, this red line right here for the Suezmax, you know, it's been pretty steady overall. It's been staying in the 35 to 45 range, a $10,000 difference for the TC. And so, you know, really with it being this high, you know, the company's just making money. They're printing money. And, you know, Herb's been saying that quite often. You know, we're in a good spot. You know, we're making money. We're doing the right things. And, you know, I am very comfortable holding this company. Okay. They have a high dividend yield. In you know, historically speaking, the oil tanker industry has been very volatile. But since it's so close to its fair value, the company right now is trading at like $2.62 after the dividend. So it's very close to their book value. They're making almost $300 million a year based off their TC rates. Why not just sit and hold, you know, and collect that 10+% dividend with a good management team? And so at the close on Friday, I ended with 607 shares because my $41 of dividends finally hit the reinvestment, which was over 15 shares. My average share price is $3.24. So I'm down 16%, but obviously, you know, that could change at any moment with these type of industries. That could rocket up. And I'm just happy collecting the dividend. Now, what I like to do is actually, you know, read the past quarterly report, because Herb breaks it down. He talks about what he sees, where the company is at, and I really like his style on how he does it. So let's read that Q1 report. Nordic American Tankers NAT report as of March 31st, 2025. The path points upwards. Thursday, May 29th, 2025. 90-day periods offer a short-term snapshot of a company. However, a meaningful analyst must contain a bigger, longer-term picture. Direction of NAT is unquestionably upwards, and we create room for profitable growth. Whatever we do, dividends remain an important objective. Highlights. The dividend for the first quarter is 7 cents per share. This is our 111th consecutive quarterly cash dividend. The dividend is payable June 26, 2025 to shareholders on as of record of June 12, 2025. During the first 5 months of 2025, we have acquired 2 2016 built vessels for a combined price of $132 million and sold 2 of our 2003 4 built vessels for a combined price of $45 million. Our cash position per March 31st, 2025 was $103 million. Increased pressure on sanctioned oil trades or agreements with sanctioned nations combined with increased OPEC volumes will increase demand for our ships. This so-called shadow fleet is pushed further into darkness. This is good for NAT. The average time charter equivalent TCE for NAT time charter and spot fleet for the first quarter of 2025 came in at $24,714 per day per ship. That's the operating costs are $9,000 per unit. And so if you look at the time charter rate of 36 minus the 9, it kind of evens out, right? And this was a couple months ago, so that could have been like 35. Together with the sale of Nordic Apollo, this gave a net result of $4.2 million for the first quarter of 2025. Thanks to careful voyage planning and adjustment of speed, we continue to reduce emissions of our vessels. The top quality of NAT vessels is proven by the vetting performance undertaken by major oil companies. These companies employ about 50% of the NAT fleet. We have big institutions involved. Sincerely, Herbjørn Hansson, founder, chairman, CEO, Nordic American Tankers Limited. And he goes further. That was just his letter. Our fleet, as of March 31st, 2025, our fleet consisted of 19 well-maintained Suezmax tankers with a cargo lifting capacity of 1 million barrels per day. We only have Suezmaxes in our fleet, and the vast majority of our ships are built in South Korea. A few days after the first quarter, on April 4th, we took delivery of a 2016 built Suezmax tanker, now named Nordic Galaxy. On April 28th, we took delivery of the sister vessels, Nordic Moon, also 2016 built, same South Korean yard, Sundog. The purchase price was $6 million for each unit, and both vessels were financed with 50% lease financing. As previously advised, we have sold the 2003 built Nordic Apollo, and the vessel was delivered to its new owners on February 26, 2025. We have also agreed to sell the 2004 built Nordic Castor, and the buyers plan to take delivery of the ship during June 2025. So that should have happened already. The combined price for these vessels was about $45 million. These two vessels were part of seven ships that previously was financed through CLMG Bill Bank. Since the refinancing on February 6, 2025, these vessels are no longer collateralized. After these transactions, our fleet will count 20 Suezmax tankers. We take extra care to maintain our vessels the highest standard of safety, crew, cargo, environment, the outcome inspection, ships, oil companies. NAT has one of the largest fleets, Suez tankers in the world. In a capital-intensive industry like ours, careful maintenance of our ship and timing financial expenses are key elements to ensure our financial stability and commitment to paying cash dividend. I swear it said we had 21 somewhere. Let's see. Oh, I know. They said it in a different report. Okay, let me bring that up real quick. They said that in a different report. Now I'm remembering. Just making sure, because it was 21. May have gotten that wrong. Let me see. I swear I saw 21 somewhere. Guess not. So we have 20 vessels instead of 21. You get the picture though. Let's see. Let's go back. Our results for first quarter 2025. The first quarter of 2025 produced a net income of $4.2 million, or EPS of 2 cents. The net income included book profit of sale of Nordic Apollo, $9.5 million. We've talked about the $24,000 ship per day. Financing, obviously they're financing ships. Obviously they're capital intensive. World economy and the tanker market. Let's talk about that a little bit. There's no shortage of geopolitical uncertainty, but we continue to see high demand for oil and oil transportation. OPEC starting to increase their oil production is an important trend that is very favorable for the tanker market going forward. The same is the carrot and stick approach by the U.S. towards sanctioned oil producers like Russia and Iran, with increased pressure in sanctioned trade, pushing more business into compliant oil trade. Should a deal be reached with these countries, this could make a large proportion of the shadow fleet obsolete. There are interesting dynamics for NAT oil tankers. Seasonal variations will occur, but as we've seen so far, these last years, the trend supports future earnings at higher levels than in the past. NAT in particular stands to benefit from the fact that the supply of Suezmax tankers is not excessive in a historic perspective. Environmental regulations increase steel and production costs, and higher interest rates make investing in new ships quite challenging. The world Suezmax fleet counted 588 vessels as of March 31st, 2025. The first quarter 2025 saw an order book for new Suezmax tankers develop more or less flat, with 97 vessels to be delivered over the next 4 years. But to put this in perspective, before the end of 2027, there are 153 conventional Suezmax tankers of 20 years of age or older. Between today and the end of 2027, 89 new vessels will be delivered into the world Suezmax fleet. The world Suezmax fleet we'll see 26 new vessels added to the fleet in 2025, 34 in 2026, 33 in 2027, and still only 4 new build orders are booked for 2028. The available shipyard capacity for large oil tankers is low and leaving limited capacity to build additional Suezmax tankers with quality yards on this side of 2027. All the above is good news for short and long-term outlooks for our tankers. It is anticipated that the tanker markets will continue strong in coming years. The supply of tanker tonnage is inelastic in the short term. When there are too many ships in the area, rates tend to go down. When there is scarcity of ships, rates tend to go up. Short-term spot tanker rates may be expected to be volatile. Obviously, corporate governance is really important to them. Strategy going forward, the NAT strategy is built on expanding and maintaining a homogeneous and top quality fleet, leveraging our industry networks and close customer relations with major oil companies and oil traders. We are a divided company with the objective of having strong balance sheet and low general administration costs, enabling us to distribute free cash flows to our shareholders. In an improved market, higher dividends can be expected. Our fleet of 19 or more or less identical vessels is a special feature of NAT that is particularly valuable to our customers. NAT is firmly committed to protecting its underlying earnings and dividend potential. We shall safeguard further strengthen position in a deliberate, predictable, transparent way. I swear I saw 21 vessels somewhere. And here's the report. I mean, we went over the book value. They have 867,000 assets. Current liabilities 101,000. Total non-current liabilities is 265,000. So they're in some good shape. I think there's 20. This is a little old, so they might have 20 now. But even with the numbers, it's still kind of in line. They're making a good amount of money. And check the press releases. I have 1,600 in this company, and I just continue to hold for the dividend, and hopefully we see an uptick in share price as we go along. But I'm pretty comfortable with where I'm at right now.